And hi, everyone. Thanks for joining. I'll be using this presentation to go over the core themes that have come out to us from this year's most valuable Malaysian brand study, and also running through the results at the end. I'd originally wanted to focus the presentation on digitalization, but after going through the results, I felt that that might be a little bit limited. So really what we've seen from the report is that brands have come out from the pandemic in different ways. Digitalization is obviously core, but so is the drive towards sustainability and sustainable business practice, and also the diversification of business opportunities and capabilities. I'll get into all of these themes over the next few slides, but firstly, if I just briefly talk about myself and about Brand Finance as a company. So my name is Alex Haig. I've just recently taken over as Managing Director for Brand Finance Asia Pacific. As a company, we're present in 25 different countries, and in my position, am backed up by offices in India, Sri Lanka, China, Vietnam, Singapore, Indonesia, Australia, and of course, Malaysia. Our reason for being is to help put financial numbers to marketing decisions. By doing that, we're trying to make it easier for budgets to get past finance teams, but also more importantly, we're trying to make sure that whatever brand strategy or investment decision that gets made adds the most value to businesses. In order to do this, we count on a global team of market researchers, valuers, and brand strategists, which I think makes us unique. Together, we value over 5,000 brands a year, and that creates the world's largest database of brand values. And all of those brand values are backed up by a market research study which covers over 100,000 respondents worldwide and over 4,000 brands or unique brands. Finally, we're also heavily involved in standard setting and contributions to best practices. And you can see that from all of the affiliations we have here, from the Marketing Accounting Standards Board in the US to the Licensing Executive Society, the International Network of Trademark Attorneys, International Valuation Standards Council. As part of our studies of the world's most valuable brands, we actually value brands in 40 sectors and even more countries. Although today we're going through the results from a Malaysian perspective, you can also see how your brand compares to other similar brands in your sector worldwide. All you need to do is just go on to branddirectory.com to see those reports. I'd encourage you to do that. And now, just before I get into the results of this year's study, I generally, in these presentations, like to explain in a little bit of detail why brands are valuable, because it helps to explain how we do the valuations and why we do them the way we do. And it also helps us to understand what can really be done to add brand value. So first, in general terms, our research has found that the business impact of brand is large, very material. Brand value makes up, on average, across all sectors and brands, 20% of business value, which means that brands are generating around 20% of expected profit for businesses worldwide. And brands make up such a big share of business performance because of their impact on businesses' various stakeholders, and that has an impact in turn on businesses' different departments. So here you can see those effects split onto those different departments. If we first think of the brand impact on customers, and therefore the marketing department. Our research has found that well-known brands with good brand equity have more leads, a higher product trial, higher prices, and stronger brand loyalty. We also find that stronger brands help build the profitability and value of their businesses over time, as I've just laid out. In particular, this means that the share value of businesses with strong brands grows by almost 2 times the speed of the market overall. Linked to this, and obviously relevant to investor relations teams, financiers often offer cheaper capital to stronger brands. We found that strong brands reduce perceived risk and therefore reduce costs. In fact, our research has shown that on average, strong brands can borrow 2.4% less, or at cost of capital that are 2.4% less than weaker brands. For HR departments, stronger brands can mean lower recruitment costs. In fact, we did a study of CEOs and their pay and found that CEOs of stronger brands demand lower pay than those at weaker brands, thereby reducing the cost of the company. Finally, the risk department. So it's generally known, and particularly in certain sectors, that brands with a strong reputation are more likely to gain government contracts and also avoid legal and public action, obviously having a strong benefit to the business overall. So when we're doing the brand valuations, we try and take all of these benefits into account and incorporate them into our model. And these benefits are strong. As I said, if we take the strongest brands in our study and compare them against the market, you can see that brands with a AAA rating, the strongest rating, outperform the market by almost 70% in average growth. And all that being said, it's important to bear in mind that brand building takes time. So this graph helps to show the uplift that comes from brand investment. All of the top brands in our study have taken a long-term view to building their brand strength and therefore demand. This type of long-term view focused on core brand metrics like awareness and brand equity rather than just on sales activation are what is underlying the strength of the strongest brands in our study. And that point helps to outline the benefit of longer-term tracking. Anyway, that's the theory. So now I'll just get into the detail of how we do the calculation and then which brands have come out on top. So first, I'll just run through the methodology. So at Brand Finance, we use a methodology known as the royalty relief method. It attempts to find the value that brands bring to businesses by simply looking at what people have paid for them in the past. Given the simplicity of this concept, it's the preferred methodology for courts, tax authorities, accountants, and it's backed by the ISO standard of 10668. The principle behind it is that if you didn't own your brand, you would have to license it. Since you do own your brand, how much value are you saving by not licensing it? Within the approach, there are 4 key pillars. So firstly, the brand strength index. Here we're looking at how strong the brand is compared to competitor brands. And within that, we create a composite index where we use a variety of different measures covering multiple stakeholders and in order to benchmark the brand. That scorecard and that benchmarking helps to give each brand a strength score out of 100. Then we identify how important brand is in the sector compared to other assets, what we call brand impact. What we're trying to see here is what proportion of revenue and profit is reasonable to expect brand to be contributing to the business given its sector. Here we first find a range of what could reasonably be expected to be paid for by brands in the sector. And then we use the brand strength to find out what each brand would be able to charge themselves. So stronger brands could charge more, weaker brands would charge less. We then look at the underlying business. So the bigger the business is, or is likely to be in the future, the higher the volume of purchases the brand will affect. Of course, there is an interplay between the strength of the brand and revenue growth, but underlying size is obviously a very key component. These steps find the impact of the brand on profit and revenue into the long-term future, but obviously we need to get that back to a present day value. And so we need to find out, what would someone pay to own the future stream of income related specifically to brand right now at this date? And in order to do that, we need to use a discount rate to take into account the so-called time value of money. As you can see here on this slide, all of these steps are covered by the ISO standards. And actually, to back up the first step, the brand strength assessment, we conduct research in over 30 countries. As you can see here, 10 in the Asia Pacific region, and more coming next year. In Malaysia, we look specifically at 10 sectors. These are the biggest in the country according to brand value. And depending on the sector, we either use an extended list of questions covering funnel, usage, loyalty, ad recall, image attributes, etc., or we use a summarized list of representative attributes, so the funnel and then also brand reputation. If you'd like to understand what we have for your sector, please be in touch. My contact details are in the report online, and they're also at the end of this presentation. So one thing we like to do with the research is to summarize what are the most reputable brands by country, as it often tells us a lot. If you look at this first list, you can see that many of the top brands worldwide are national champions, which are most reputable in their own markets. Often we see that in smaller markets, international brands are dominant, and it seems that that is the case in Malaysia too. So only Petronas makes it into the top 10 most reputable brands within the 10 sectors we selected here for research. And in our view, researching reputation is key because it's a metric that's easy to measure, clearly influenced by marketing actions, and it's a core indicator of brand consideration. And here you can see a close relationship between brand reputation among Malaysian banks and the likelihood that people are to consider them for a new banking relationship. And really that brand consideration is split into two parts. So firstly, familiarity. Are you well enough aware of what the brand offers for it to enter onto your potential list of options? And secondly, consideration relevance. Are you actually going to consider them when you're familiar with them? We created a composite measure based on these two metrics called Brand Beta, which shows brand popularity and closely tracks changes in market share in most sectors. When we look at the results, we can see that Shell tops the list, with Petronas in an area of statistical significance, but very slightly below. In general, though, you can see that Malaysian brands do well on this list because they dominate high-use sectors like oil and gas, airlines, and banks. And actually, if we focus on this last sector, we can see that Maybank is the most popular brand in the banking sector here. So Maybank is a great example of the core theme of today, which is building back during the pandemic. So I just wanted to quickly focus on them and some recent research we've done. So Maybank has focused on digitalizing its service offering, and as part of that process has launched the May mobile banking and e-wallet service. And the creation of a new brand to market this service, it introduces to us an interesting brand challenge for other brands launching similar services, especially given the recent decisions on rights to pursue digital banking services in Malaysia. And that challenge is, should we create a new brand or should we not when launching a new digital product? According to our research, in the case of May by Maybank, creating a new brand can be helpful. one of the biggest challenges in these sorts of launches is to make sure that the new brand is clearly understood and well known, and therefore doesn't create confusion with its parent brand. Despite being launched less than 2 years ago, the brand already has almost 80% prompted awareness. So obviously together with a lot of promotion, but it seems like the brand has already been able to get into the minds of consumers. And importantly, there doesn't seem to be strong evidence that that's creating confusion with Maybank, nor cannibalizing its awareness, with 95% of those aware of the brand knowing that it relates to Maybank. So it's obviously doing something right, basically. But importantly, not just on awareness, but also on perception. It's not only reached that level of awareness, but also 80% of customers are saying that it's improved their banking experience. All of that has had a transformational impact on Maybank's brand reputation. It's partly why it's now the strongest brand in our study. It's now considered to have by far the best website and app, according to our research within the sector. And that obviously explains a lot of the performance in the brand beta. Now, all of these perceptions together help to provide the context and background for the brand valuation results, which also goes into the brand strength assessment. I'll go through all of the results now. So just at a general level, sort of a market level, the total value of Malaysia's top 100 most valuable brands has increased 21% to $53.7 billion US. 21% is a very strong performance. And actually, when you see the report, you'll see that there are a very large number of brands going up in value this year. But what you can also see from this graph is the dominance of the top brands. So actually, if you just take Petronas on its own, it makes up almost 5 times the value of the whole of the bottom 50 of the table. In the next few slides, I'll go through the results for some individual brands and also the ranking. But first, I just briefly will show you the value and how the value is split by sector. As you can see from this graph, oil and gas dominates the table with 26% of overall value, and that's mostly Petronas. I think that Petronas was 13.3. Following this, banks make up 21% of the table, then telecoms, leisure and tourism, and utilities. Although oil and gas and banking do dominate in some respects, the spread of all the sectors and the size of the other category shows that there's a broad base from which Malaysian brands are growing internationally. And so here we go. So this slide shows the top 10 most valuable brands in the ranking for 2022. So congratulations to all of those brands that have made it into the top 10 this year. Petronas tops the table, followed by Genting, Maybank, CIMB, and Tenaga Nasional. 6th place is Sime Darby, then Public Bank, Maxis, AirAsia, and TM. Just picking a couple here. So Genting rises to 2nd place. So they've actually achieved 44% growth. And that's all following the removal of pandemic-related restrictions. Use the kind of growth in demand to improve efficiency, improve quality of its services, and also update its marketing strategy. And all of that is with the goal of improving customer experience. We now go right to the bottom of the table. You can see TM. TM breaks into the top 10 this year after resuming revenue growth after 3 consecutive years of decline. And that's all linked to the new TM transformation program. Again, focused on customer experience in order to grow revenue. And now, I skipped over Petronas on the previous slide in order to focus specifically on them here. And Petronas is, for the 12th consecutive year, Malaysia's most valuable brand with a value of $13.6 billion US dollars. It's also the brand with the highest familiarity in Malaysia and the highest reputation among oil and gas brands in the country. Petronas's brand value growth has come from its sustainability agenda, as well as a rebound in the demand for fuel and related products. And it's basically focused around what's called the three-pronged growth strategy. And that involves investing in its core and growth portfolios in traditional hydrocarbons, but also building capabilities in new energy, because it has a goal of net zero carbon emissions by 2050. Now, it's not the top of the table or anything, but I wanted to focus on AirAsia because of the theme of building back from the pandemic. So as with all airlines, AirAsia was quite brutally hit by COVID-19. Passenger numbers were close to zero for many months. Now passengers carried are getting closer to what they were before the pandemic. And actually, Malaysia's pre-pandemic domestic route network has been restored and international network is getting there. The issue is that the pandemic obviously exposed a high risk of major disruption to its core business. So as a result, AirAsia has launched the AirAsia Super App, and that has had the benefit of strengthening its core offer strengthening its offer generally by combining the offering of the core AirAsia brand, flights, etc., with new offerings like food delivery, but also combining the offerings of supporting brands like Tune, BigPay, and Santam. It's effectively strength through diversification. And as a result of this strategy, AirAsia has grown over 18%, and it's opened itself up to sectors that will help it to grow quickly and exploit its strength, particularly in the strength of its brand over the next few years. Now, this slide shows the top 10 fastest growing brands in the ranking for 2022. So again, congratulations to all of those brands that have made it on the list. Affin Bank is the fastest growing brand in Malaysia, then Top Glove and Genting. Affin Bank in particular doubled its net profit this year, and it's issuing more consumer loans. The brand basically able to capture that business because it improved its perceptions on value for money, according to our research. But it's also investing a lot in technical innovation, and as a result has won 2 awards at the Malaysia Technology Excellence Awards of 2022 in cloud and mobile banking categories. All of that together has meant that, as well as this 45% growth in value, brand strength has grown by 7 points out of 100. So really strong result for Affin Bank this year. This slide shows the top 10 strongest brands in the ranking for 2022. So again, congratulations. So taking into account all brand strength measures, Maybank comes out on top. As we've seen before, Maybank is trying new service platforms and also separately driving sustainable practices. And that's leaving it near the top of our reputation and popularity ranking. But that being said, banks in general are quite well represented here, with 4 of the top 10 being banks. So that's Maybank, Public Bank, CIMB, and Bank Islam. One special note is Top Glove, which jumped into the 5th position after rises in familiarity and reputation as a result of all the good work that Top Glove has been doing during the pandemic. Now, we're just coming to an end now of the half an hour, so I'll just wrap up with a few thoughts. And particularly, what can we take from this year's ranking? So firstly, brands are growing strongly again, 21%, after being stagnant during the pandemic. Brands like Petronas are taking advantage of the necessary move to sustainable economic growth and sustainability more generally. Obviously, the public pressure is not as strong in Malaysia as it is in some other markets, but it's a defining part of the next probably century, and Petronas is obviously taking a front-footed approach on this. Maybank is obviously taking advantage of the move to digital services in financial services. Customers seem to be noticing, but it's also a trend that will affect all banks and financial services in the future. And finally, AirAsia is protecting its brand strength and business value through diversification. In many ways, that's actually a strength of Malaysian brands and businesses in general. So, a lot to learn from that. So here we go. That was the end, and I think there should be some time for some questions.
Thanks, Alex. So we have quite a few questions, but we are almost out of time. So let's just take a few. So we have one question. Given that there may be a global recession coming soon, how should marketing teams respond?
Yeah, so thanks for that. So one piece of research that we did during the pandemic was the impact of marketing during pandemic. Obviously, it's easier said than done, but one of the big things we found was that those brands that were able to continue marketing were able to maintain and in fact increase market share. So finding a way basically to maintain investment, particularly as a share of overall voice, is sort of key basically. But it kind of remains to be seen whether or not there will be a strong recession, or whether there even will be one at all. So sort of a potential question for the future, I think.
We have another question. How big of an impact is sustainability having for Malaysian's brand's strength?
Sure, yeah. So I think, yeah, there are a couple of questions about sustainability. So, as I said before, sustainability is obviously something that is being pushed for, or CSR is being pushed for with more vigor in some other markets. But you're seeing things around reporting of sustainability activities taking a much more central stage in international discussions of big company reporting. So it's going to become more important to be actually doing something, and then become an even more difficult sort of PR challenge as you go along, marketing challenge, to explain what benefit each brand is doing. A lot of industries have become large, well, a lot of brands have become large off the back of industries that are now considered somewhat unsustainable. And so there's a question, therefore, of how to explain the activities that you're doing to perhaps reduce the impact of those less sustainable activities, and kind of show the benefits of anything beneficial that you're doing in the future. I think there was a question about whether or not there is a global study specifically on brands from a sustainability perspective, and yeah, we are actually doing that. I mean, in our large study, we are focusing some particular our large research study worldwide. We are asking some specific questions around sustainability and CSR activities. But we're also doing later this year a study on what sustainability and CSR actually means by sector, because I think what we've realized, or I think everyone knows, is that actually sustainability means lots of different things to lots of different people and sectors, and it really needs to be looked at on a sector level what brands are doing.
Thank you, Alex. I think we're just over time limit, just over 3:30. I'd just like to say thank you all for joining us today. Our webinars are available to view online on the Brand Finance YouTube channel, and this webinar recording will be circulated to all registered delegates tomorrow afternoon. If you would like any further information on the topics discussed today or on how to register for upcoming events, please email Alex or events@brandfinance.com. Thanks again, and we look forward to reconnecting with you all.